Good morning, everybody. Paul here, coming at you with a Crypto Coffee update where we talk about all of the news, events, and happenings in the exciting world of decentralized finance, also known as crypto. And of course, with all of the information we have to cover here today, we gotta have something to fuel our fire, and it's going to be this simultaneous sip of delicious coffee. Cheers. Refreshing. And happy Bitcoin Pizza Day, everybody. Bitcoin Pizza Day is something that's been going on for almost a decade now, which is wild to think about. This is a day that celebrates the first in real life exchange for a commodity using Bitcoin. And it was 2 large pizzas, and it cost 10,000 Bitcoin. In today's valuation, that's about $80 million, which is just wild to think about. But at the time, Bitcoin was trading for just pennies on the dollar, so this was a pretty good deal. The guy paid about $40 or so for 2 pizzas in Bitcoin. Definitely going out on a limb for the pizza shop owner and getting out of the comfort zone for one Laszlo Henyex, perhaps, I think is his last name. But either way, Laszlo, shout out to you, man. On May 22nd, 2010, Laszlo struck out and, as said, struck a deal with this pizza shop owner. Assumingly, the pizza shop owner is very delighted if he's still holding on to any of these Bitcoin, but as is the case with many of these early transactions and early holders, sometimes private keys get lost, sometimes individuals sell when they think, hey, the price is now $100, that's fantastic, I'll go ahead and sell. History is, hindsight really, with history is 2020, no one could have known the meteoric rise we would see in Bitcoin, but here we are nonetheless, celebrating the 9th annual Bitcoin Pizza Day. So cheers to you, Laszlo. Grab yourself a slice of pizza. I guess unless you're on that carnivore diet, then grab yourself a slice of meat and celebrate nonetheless in spirit with the first in real life transaction for Bitcoin. Fantastic stuff. Now, onto some more perhaps immediate relevant news. JP Morgan says Bitcoin's jump is mirroring the 2017 boom and bust pattern. So very interesting to see. Over the past few days, the actual price has moved sharply over marginal cost, and this divergence between actual and intrinsic values carries some echoes of the spike higher in late 2017. And at the time, this divergence was resolved mostly by a reduction in actual prices. I dislike the term intrinsic value. Value is indeed subjective and derived from that of the individual. That's why baseball cards, for example, which are just cardboard with images printed on them, can have such a meteoric valuation relative to some other assets. But defining an intrinsic or perhaps more applicable fair value for any cryptocurrency is clearly challenging, and that's definitely true. If the folks over at JP Morgan, some of the most seasoned and brightest financial minds in the world, have a difficult time ascertaining the future price of assets, then it's definitely a wild ride and any man's game, or woman's game, by the way. So here we are checking out the coin market cap price for Bitcoin way back in October 2017, October, November, December. In just 2 months, the price exploded from in the $5,000 range, maybe it clipped, you can see clip 6,000 a little bit, all the way up to our all-time high valuation of $20,000. So over 3 times the price, a 3x increase essentially in just 2 months. So this was a time of mania and hysteria in the Bitcoin and crypto markets as a whole, in a time some people remember fondly, or some people may look back with chagrin if they ended up buying around this top area here. That would make, assumingly, somebody a lot less happy. But for all the hodlers out there, they don't seem too concerned about the price, and they're definitely waiting and biding their time for a future Bitcoin bull run. And JP Morgan is saying that is potentially in the cards. Now, luckily, it seems as though the IRS is looking to potentially update their Bitcoin tax guidelines as the price is rising. This is coming from the IRS Commissioner Charles Rettig, and he says, quote, this is a quote directed at a bipartisan commission from Congress, 21 members, asking for clarification about Bitcoin and digital asset taxation law. I share your belief that taxpayers deserve clarity on basic issues related to the taxation of virtual currency transactions, and have made it a priority of the IRS to issue guidance. Specifically, your letter mentions 1. Acceptable methods for calculating cost basis, 2. Acceptable methods of cost basis assignment, and 3. Tax treatment of forks. We've been considering these issues and intend to publish guidance addressing these and other issues soon. Keep in mind, FinCEN recently homogenized a lot of the various guidance that they have issued previously into one nice 33-page document. We reviewed that 2 Crypto Coffee updates ago, so you can check that out for yourself if it's something that interests you. But this is definitely something that can help individuals in the United States who currently are tackling very opaque and a lot of the times clunky tax laws that may or may not apply to Bitcoin? Is it a cash? Is it a commodity? That very much depends on how the digital currency, digital commodity, digital asset in general is being used. One individual definitely thinks that this is a bit humorous. Dove Wan, she comes out with some great stuff on Twitter. I trade the magic internet money on infrastructure that does not belong to any sovereign state. It's a non-productive asset depending on zero state-owned common goods to avoid sovereign theft, aka taxation. Paying capital gains tax for such activity is such a joke. So this is kind of the, I guess you could say, libertarian ANCAP thread that runs through the crypto community, and definitely having to grapple with this opaque, oftentimes draconian nature of tax law can be difficult and frustrating for individuals who deal in digital assets and have become perhaps accustomed to the expediency of transaction that they facilitate. But nonetheless, compliance is something that keeps everybody safe, keeps everybody happy. Well, maybe not happy per se, but it definitely avoids a lot of headache and hassle. So follow the laws, go for compliance, and hopefully it will be much easier as time moves forward with the IRS potentially issuing guidance. Now, here we are seeing that people are flocking to Bitcoin, not quite in record numbers, but definitely to exchanges. According to some Alexa data, Binance, the giant of a cryptocurrency exchange, recently entered the top 1,000 yet again for Alexa searches. This is on the heels of a massive hack that Binance experienced and had a bit of a social gaffe when suggesting perhaps that there could be a chain reorganization to recoup the losses. Ultimately, that didn't happen. But considering that, nonetheless, Binance is seeing a lot of limelight and spotlight from new users and perhaps returning users, goes to show that the crypto market is definitely shrugging off a lot of this negative sentiment on the heels of some of these hacks, something that we didn't see previously, and in the throes of the bear market would have definitely been a hammer in terms of downward pressure on price. Doesn't seem to be the case anymore, so very interesting to see. One piece of information: South Korea is completely dominating this market, from eToro senior analysis Matt Greenspan. Here's the data from Twitter that he's looking at. And you can see BitHum and Upbit, both of which are Korean exchanges, are leading the way with Bitfinex on their heels. Bitfinex has been embroiled with a lot of issues recently, especially from the New York Attorney General, which we'll cover here momentarily. But suffice to say, just look at this chart, guys. Liquid, pretty large. Then you can see Coinbase, of course, Kraken's in there, but BitHum is just out in front by a large margin. Keeping in mind, in the 2017 bull run, there was what was known as the kimchi principle, aptly named since Korea dominated certain digital assets at certain times. At one point, Ripple had a 30% premium on Korean exchanges due to the voracious appetite of the Korean people, a very homogenous nation that seems to also be reflected in their appetite for specific digital currencies. Who's to say if that's going to repeat in this bull market, potentially bull market? Maybe an inevitable bull market, but there's no way to tell. Only time will tell, but it definitely seems as though that when Korea moves, they move in unison. So very interesting data to consider. Also, speaking of the U.S. government, the SEC has shut down a Ponzi scheme which was allegedly issuing diamond-backed cryptocurrency. Something very strange to me. Last Crypto Coffee update, we covered the Cambridge report, which differentiated between two types of blockchains. You have endogenous blockchains and exogenous blockchains. Endogenous blockchains deal with only information contained within the ledger. Think Bitcoin. A Bitcoin's a Bitcoin's a Bitcoin, and it doesn't deal or necessarily require any outside assets that it is linked to. An exogenous asset an exogenous blockchain is a blockchain that specifically deals with things that are outside of the ledger, and the ledger represents those external values. So for instance, if you're putting lettuce on the blockchain, each piece of romaine needs to be correctly linked up with a transaction on that network. A diamond-backed cryptocurrency is an exogenous blockchain where each diamond would need to be linked up with the blockchain itself. Unfortunately, it seems as though there was no diamonds to begin with, so hence the issue. The SEC came in and shut them down. Quote, the SEC's diligent investigative work uncovered the Ponzi schemes, and our goal is to bring justice to the harmed investors. So always do your own research with this kind of stuff, guys. If it sounds too good to be true, it largely is. Most legitimate ICOs or any kind of capital raises will have know your customer and anti-money laundering, KYC, and AML regulations in place. I know some investors want to avoid that kind of thing, but nonetheless, it does disproportionately expose anyone who undertakes that activity to things like this. So be safe out there. Always do your own research, and keep in mind that if you're dealing with an exogenous blockchain, there is some issues potentially in which the underlying physical asset that backs the chain may not actually exist. So something to consider. Now, moving along, a huge piece of news: the Bitcoin white paper and software has been allegedly copyrighted, or at least a copyright claim has been submitted by Craig Wright. And just this action alone has doubled the price of Bitcoin SV. An interesting takeaway from this is just a demonstration that Bitcoin SV's order books have to be paper thin for this to have occurred. Doubling the price of any asset is insane. And even if Satoshi Nakamoto were to pop his head out and prove to the world that, hey, I'm indeed Satoshi, doubling the price of Bitcoin, BTC, would be a mammoth undertaking. Yet Bitcoin SV's price was relatively easily doubled, despite the fact that it has been delisted from many exchanges. According to the Wright sympathetic and owned by Calvin Ayres news site CoinGeek, quote, Wright is now legally establishing that he is Bitcoin's creator after being dismayed to see his original Bitcoin design bastardized by protocol developer groups, first by Bitcoin Core and then again by Bitcoin Cash. Considering that Satoshi Nakamoto undertook such arduous lengths to protect his identity, one has to wonder if Wright is indeed Satoshi. Why is he acting in such a way where he would be offended and confused why people don't believe him? After all, if he went through all the effort to obfuscate his identity, it seems as though he did a really great job, so the skepticism is, of course, well warranted. But nonetheless, neither here nor there. According to another individual who's sympathetic with Craig Wright, better than anyone else, Craig understands that Bitcoin was created to be a massively scaled blockchain to power the world's electronic cash for billions of people to use and be the global data ledger for the biggest enterprise applications. Perhaps, who's to say? One thing's for sure, there is a lot of information that does the opposite of corroborate Craig Wright's claim of being Satoshi. But again, last time I said that, there was a lot of voracious attacks, such as, you're going to get headshot, for just saying that. So definitely there are some weird folks out there. Language is something that is tricky indeed, and coming up with strong arguments for or against is something that not everybody seems to have the capacity to do. One thing is for sure, though, the information is not stacking up in Craig Wright's favor. And with the upcoming lawsuit between Craig Wright and Peter McCormick, the What Bitcoin Did podcaster, it'll be interesting to see what information comes to light in that court case. So let's go ahead and move on to some more information. Speaking of difficulty in corroborating info, CoinGecko, a competitor to CoinMarketCap, has introduced what's known as a trust score to combat fake exchange volume data, something that I think everyone is excited to see, considering the recent Bitwise report demonstrated that roughly 95% of Bitcoin volume is indeed just false wash trading, something that can definitely bring some new users into various exchanges. But in terms of pinning down the actual valuation and liquidity, the ability to buy or sell Bitcoin without directly impacting the market, having that accurate information is very important, especially if you're going to be moving large amounts of any asset. So it's good to see CoinGecko introducing something like this. We're not going to go into huge amounts of detail just for the sake of brevity, but I'm going to put this below in the description along with everything we look at here today, so you can check behind, do your own research, and if you're interested, check out this new addition to a CoinMarketCap competitor. Now, I said we'd talk about Tether, and Tether has admitted in court that they invested some of their reserves in Bitcoin, a point that definitely seems to be almost intrinsically hypocritical and confusing for a very important reason. Tether, and this is from the court judge Joel McCoheen, Tether sounded to me like a sort of calm in the storm of cryptocurrency trading. Assumingly here, the judge is referring to the fact that Tether is indeed pegged 1-to-1 to the US dollar. And so if Tether is backed by Bitcoin, how is that consistent? If some of your assets are in a volatile currency that Tether is supposed to somehow modulate, that seems like it's playing into what they're saying. So very strange things going on there. The logic definitely follows. If indeed Tether's goal is to be a dollar-backed, or at least a 1-to-1 pegged asset to help to stave off some of the volatility for users in the cryptocurrency ecosystem, and they're backed by those they're underlyingly backed by those volatile assets, then they don't really have a leg to stand on per se in terms of solvency, since if the Bitcoin price were to collapse and their assets are indeed in Bitcoin, then that's going to absolutely ravage their overall holdings, or at least the US dollar valuation of their holdings, something that they're supposed to be backed with. Indeed, they are only 74% backed, more than a lot of people were thinking. Definitely, I thought it would be closer to maybe 50% or so, so that's perhaps encouraging to see. But nonetheless, Tether / Bitfinex, both owned by the same entity, have been embroiled with the New York Attorney General's office for a long while now. Bitfinex has moved to dismiss due to jurisdictional issues, stating that indeed the United States does not have legitimate jurisdiction for this case. But nonetheless, this is ongoing. This fight is continuing, and Bitfinex claims since the injunction, it has successfully raised $1 billion. Keep in mind, we did cover the fact that they had an initial exchange offering, a private token sale, so perhaps this will offset the $851 million that was frozen by the United States authorities. So there's no real clear answer as to what's going on here at present. Tether did come out and admit that, hey, this was less than 1 Bitcoin that we ended up purchasing, a very minuscule amount. It seems just almost strange that they would admit to purchasing such a negligible amount relative to their overall US dollar or US dollar equivalent holdings. But either way, we'll see if the case ultimately gets dismissed due to jurisdictionality issues, or we'll see if the New York Attorney General continues fighting the good fight, I suppose you could say, or at least fighting within their jurisdiction to bring to light some of this information as it pertains to Tether and Bitfinex. Strange stuff all around. Speaking of stable coins, Tether is not the only stable coin on the block, and Circle is one of them. They are actually cutting, however, 30 employees, citing market and regulatory conditions. And given what the New York Attorney General has been putting on Tether, essentially, one has to wonder to what degree that court case may potentially set precedent to make it more difficult for Circle to do business. Circle is indeed involved with Poloniex in some way, and it has a partnership with Coinbase. So while there was much fanfare initially, it seems as though Circle did not have a lot of luck in terms of penetrating the stablecoin market. So that happens from time to time. No 100% success rate for any project or startup is absolutely not the case. And Poloniex seems to have been losing users recently. So one has to wonder how long they may be around, or if perhaps they will stage a rebound. Maybe they as well will have an initial exchange offering and raise $1 billion. Who knows? But with that said, best of luck to everybody over at Circle. Wish them all the best in their future endeavors. And again, 100% startup success rate is just unheard of, so it's neither here nor there, and best of luck to them. Now, Donald Trump's aggressive stance in the U.S.-China trade war could be a blessing for Bitcoin, according to some, and some is Barry Silbert, the CEO of Digital Currency Group and Grayscale Capital. He says it's certainly interesting that the Bitcoin price started its acceleration moving up and to the right when a trade discussion broke down between the U.S. and China. If you've been paying attention to the global news, there's been a tit-for-tat, essentially tariff fight between the U.S. and China. It seems as though perhaps about a month ago things would smooth over and maybe an agreement would be reached, but not so much. And it seems as though the United States has begun targeting Huawei, the massive telecommunications company coming out of China and is indeed intrinsically related to the Chinese Communist Party, as are many, many, many businesses and industries that come out of China. If you look over the past 5 years, when Brexit happened, Bitcoin goes up. Grexit, which is the Greek exit, happened, Bitcoin went up. So it's interesting to see these kind of potential correlations. It doesn't mean necessarily that the money will move into Bitcoin. It just means that you don't have the forced pressure of people selling the Bitcoin. So interesting insights by Barry Silbert, but as well, he's not a bastion of objectivity. He has been pushing that Bitcoin is the new digital gold, and for individuals to ditch gold and move into Bitcoin as its digital equivalent. So he definitely has some skin in the game in terms of portraying Bitcoin as the new digital gold, but definitely it seems the price agrees with Barry in this case. Now, on the other side of the political spectrum, in terms of, I can't poke too much fun considering the state of affairs, but it is a bit ironic that I guess the side of the aisle in the United States that is very much more liberal in terms of economic policy. One of the users who supports that ideology actually heavily mismanaged some funds as it pertains to Bitcoin Cash, the digital asset. But of course, this is a new field. It's a new kind of technology, so you can't fault one individual for making a newbie mistake. I think we've all made newbie mistakes as we entered into this space, and of course, in no way can you extrapolate one individual as representing an entire entire wide, diverse ideological spectrum that sometimes some individuals fall into category, and maybe he doesn't represent others, maybe he does, but really we're talking about one individual who made a kind of humorous gaffe, but indeed was very happy to support Bernie Sanders. This is a guy who went around for one of the essentially fun little games in which one user loaded 4 cards like this, you can see here in the photo, with $10 a piece of Bitcoin Cash and hid them around the city. And so this user found it, was very excited about it, and snapped a photo. However, this is the private key. Not good. This would allow any user to essentially gain access to the wallet and drain it probably before this individual even knew what was going on. Luckily, the photo was blurry enough to where that didn't happen, and it seems as though this user did indeed get his Bitcoin Cash, which is good for him. If it's his first exposure to digital assets, this was a perhaps hair-raising and very close call in terms of lessons about the difference between public key and private key. And for those of you listening, you can expose your public key. That's how users can send you Bitcoin. Never expose your private key to anybody, because that will allow them, as said, to access your wallet and essentially get access, and if they want to, send your Bitcoin somewhere else where you don't have access to it. So a potentially hard lesson avoided, but it looks as though all is well that ends well. So kind of some humor going on there. So yeah, interesting stuff there. And Houston, we have a problem. Speaking of issues with what you can expose and what you can't, it seems as though there's some issues in terms of the delegated proof of stake ecosystem that EOS has. There's vote buying and swapping going on. I've referred previously in this series to EOS, Tron, and other DPoS networks as networks that they entail creeping centralization. Creeping centralization meaning that individuals who have disproportionately large holdings within the network are in turn disproportionately incentivized to participate in said network in a voting capacity. Think MakerDAO. Only 2 individuals were able to sway the vote, and one individual just trolling almost changed the tide and perhaps even potentially could have broken the peg to $1. Now, this is not MakerDAO. Again, this is EOS. And one of the biggest issues is vote buying. It seems as though with the rewards associated with producing blocks, some of these entities are in turn using that as an incentive to pass on to users to say, hey, vote for us and we'll give you free stuff, which is essentially how any political system seems to work. There's also some issues with centralization in terms of geography. As said with China, many industries are in turn intrinsically related to the Chinese Communist Party, given it is a unitary communist state. And many of the block producers are within Chinese borders, including the top 4 of the top 5, and Hong Kong, which is de facto controlled by China to a very large degree, keeping in mind the democratic protests that occurred in Hong Kong, and arrests were indeed made for that. So yeah, vote buying is happening, and it's something that some individuals are worried about. One proposal says that why don't they just create a kind of legitimate portal where individuals can buy and sell votes in a whitelisted manner. It's above board, it's not opaque. That way, everyone can be involved and informed as to what votes are being bought and sold. However, some individuals are saying that's definitely just caving into the problem and basically messing up the entire intended incentive system for EOS. There's no real one-size-fits-all solution. It is indeed one token, one vote. So individuals who maybe have 5 tokens aren't necessarily incentivized to actively pay attention to everything happening in the system and vote, whereas if you have, let's say, 50,000 tokens, you're definitely more incentivized to participate and vote with your dollar, or EOS in this case. But suffice to say, there's no one-size-fits-all solution, and it's really been a trial by fire with the decentralized delegated proof-of-stake systems as a whole. Again, creeping centralization just due to these natural incentives seems to be inevitable, and there's no clear way forward. Here's some clips from Telegram that we've been scrolling down, which you can check for yourself below. Again, all links in the description, with some of the conversations talking about what may be a good solution. It seems as though some individuals think a whitelisted above board market for buying and selling votes is it. What do you think? Do you think that's a good solution? Do you think delegated proof of stake is not necessarily the best solution for a public blockchain, but rather would be best relegated to private blockchains? Again, there's no clear objective answer, but let me know what you think below in the comments. And now, the collapsed Cryptopia exchange. The founder says, hey, don't worry guys, we got a new exchange coming down the pipe. Yeah, so that's happening. Essentially, Adam Clark, the individual who's a co-founder and developer at Cryptopia, is launching a new exchange, even though Cryptopia just entered into liquidation just about 1 week ago. They drained an estimated $16 million in a hack, so definitely doesn't, if that impacted them so bad, it doesn't seem as though they were practicing the best in practice security, which is keeping a extreme minimum amount of funds held in a hot wallet where all the rest are secured offline in a cold wallet. It seems as though this hack was enough to deal a killing blow to Cryptopia, and indeed they're in liquidation. But they are building acetylene for the past 9 months, and it seems as though they're trying to start again and start fresh. This one seems to be based in Malta, however, which is interesting to see. Cryptopia was in Christchurch, New Zealand, so perhaps they're trying to take advantage of the jurisdictionality of Malta, considering they are indeed more friendly to digital assets. But nonetheless, that's not going to help them if they're not practicing the best in security, and really one has to wonder what bad tastes are left in the community's mouth after the hack and now entering into liquidation. And just a week later, they announce a new exchange. One has to wonder how people will react to that as a whole. Seems to be not necessarily at the forefront, but hey, it doesn't seem like their work is going away, so we'll see how the community takes. Now, one thing I want to point out, this is completely unrelated to crypto, but related to equities. I called back in August 2018 in the Data Dash Discord, just casually chatting, saying that I believe Tesla will be completely bankrupt and out of the way by the year 2020. So by the end of 2020, there won't be Tesla anymore. It will be completely bankrupt and won't exist as a company. I believe this firmly, simply because they are running a Ponzi scheme financial setup. Despite the grandiose promises from Elon Musk, it seems every bull market in equities has some kind of paragon of success. In the dot-com bubble, it was indeed Enron. And what happened to Enron? They went the way of the dinosaur. And so here we are with Tesla, essentially. And they do not have solid financials. And it seems as though the world is finally waking up and catching up to what I announced in 2018. Tesla shares could drop to as low as $10. Currently, they just drop below 200 in worst case scenario. That's from Morgan Stanley. They're saying that indeed it is a do or die time, and given that Tesla has no clear road to profitability, they rely extremely heavily on bond conversion prices and funding derived from their equity price. So something to keep in mind, something I found interesting that I wanted to bring up. But with that said, I think that's all we have for the day. Thanks so much for watching, guys. My name is Paul. We are Cryptide, and remember, all sources below in the description. You gotta cite your sources. Paul signing off. Much love. You guys have an awesome day. Oh, the tide is rising.